Joining us now is Mark Cabana, head of U.S. rate strategy at Bank of America Securities. Interpret, Mark, if you could, what the bond market is telling you in reaction to this inflation report today.
Sure. To us, we think the bond market is signaling that the opportunity of a soft landing is widening to some extent for the Fed. Inflation seems to be falling quite rapidly, certainly more than expectations. And that just suggests that the Fed may not need to tighten as much, nor might they need to keep rates as high for as long. Inflation is certainly working in favor of the Fed right now. And as long as inflation starts to fall, then that means that the Fed will be able to keep policy in less restrictive terms than would have otherwise been the case.
Yes, but here's my question. Is the market getting too excited and ahead of itself, as we have seen in the recent past, when Fed Chair Powell will come out tomorrow and talk tough and say, we're still seeing services inflation, we're still seeing wage inflation, we're not seeing enough signs that inflation is really coming down. I'm just speculating here, but it's happened before.
Sure. I think that Powell will reiterate the message that there's still more work to be done. And that even though we've seen inflation miss the downside now 2 months in a row, inflation is still far too high. Annually, we're still running on a headline basis at over 7%, on a core basis at 6%. That's still unacceptable for the Fed. But the data is surprising in the right direction for them. And while he will say that there's still more work to be done, he's going to probably sound a little bit more confident that the Fed will be able to see inflation fall. And again, as I mentioned earlier, the odds of a soft landing are increasing modestly. That window is widening a bit for the Fed.
So do you see rates falling from here, continuing to fall into 23?
Yeah, so our rate forecasts have the 10-year at the end of the year at 3.25%. We're at 3.5% now. Rates have moved a lot very, very quickly, really, after the October CPI report and again today after the November report, suggesting that the inflation data is certainly moving in the right direction for the Fed. We do think that over the course of 2023, we're going to see rates continue to fall, and that will be especially true if the Fed is able to pause here in the next few months and then wait and see how the economy and inflation evolve. Certainly, the trend has been that inflation is surprising to the downside. And as long as that remains the case, then the Fed has more flexibility to remain patient. So, again, we do think that risks are skewed to the downside on rates, but a lot of the work has already been done, at least based upon our forecasts.
Mark, thank you for joining me.
Thanks for having me.
On what the bond market is telling us today. Mark Cabana,